Hey there, this is David Cox, Senior Portfolio Manager at Financial Lane Sync at Raymond James in Waterloo, Ontario, Canada. Today on the webinar, Where Do We Investors Stand? It is Friday, February the 28th, 2025. Let's get started. We will sort out by week here, and what a week it has been. Markets have been ugly, to say the least. I'm sure some of you are aware of that. Markets are moving, and they've been moving for the most part down. But again, short-term, big picture, lots of things to talk about. We're going to have to try to figure that out. Let's take a look here. Some of the short-term trends for sure are turned lower. You can see there's the NASDAQ down the bottom, down about 7%. Here's Bitcoin the last week. Again, a little depends on where you timestamp this from, but the bottom line is I think Bitcoin's off 22, 23% from the recent highs. And there's bonds up at the top. And are they truly going up? Let's dig in and all that and more. Just a reminder to pause your video player at any time for more detail. Here's stocks of all sizes, everything from large to micro. And you can see here, I've drawn a horizontal line at the same kind of last summer highs there. And you can see that, again, large caps are at the line and everything else is below. So it's not a surprise. Large caps have been outperforming for some time. No new information here, but I will point out, obviously, even with this chart, you can see higher highs and higher lows is the definition of an uptrend. Let's move on. Let's look at the S&P 500 here, okay? So, again, did stocks peak? There's certainly lots of sensationalist headlines, and certainly I understand fear. I get it, okay? So there's two oscillators in the bottom. The middle panel is the percentage of stocks in the S&P 1500, that's 1,500 stocks, that are over their 10-day moving average. So when this is green, just put a green circle on there, we're oversold, right? So from a perspective of stocks have kind of been washed out, yeah, we're there, not a surprise. RSI 5 in the bottom panel here, that's actually a very, very low number too, but the bottom line is generally speaking, right? Generally speaking, when you're selling into a period of weakness, it's generally the wrong thing to do, right? I mean, again, if weakness begets more weakness, of course, that is different. But the point is, you have to understand the markets have just come off. The markets are sort of sold off. And yes, fear runs high. That's exactly what happens as markets move around. But again, the magic $1 million question is, are the markets going to move materially lower? Because that's what we need to assess, right? So when we step back and zoom out, here's the weekly charts in the top panel of the S&P 500. And again, I mean, you can debate me all day long about what you think is going to happen here, but I see higher highs, higher lows uptrend. I see as above rather a 65-week big picture moving average. And here's the bonds in the bottom panel. And yes, they've had a great start to the year, agreed. But I do not see anything more than a range at best. Sure, they've had a good strength, but I don't see even higher highs. I just don't see it. It doesn't look that exciting. So let's not get too ahead of our skis here. Let's look at the strongest and the weakest. So, again, we always want to check in on asset classes, right? So Bitcoin was a huge leader last year. You can see it's just, it's off. There it is, 14.5% this year. Does this look like an uptrend? Sure, it looks like higher highs and higher lows to me, and it looks like a pullback and an uptrend. Copper futures are up 14% this year. They're actually leading the pack in our all asset list. But again, when we zoom out, this chart leaves a little bit to be desired, at least from my eyes. Gold was very strong last year and actually is pretty strong again this year. So you can see that's rising without question. Higher highs, higher lows. And again, gold up about 9.7% this week. Now, interestingly enough, volatility, which again, using the volatility index, the VIX index, we haven't seen what we would typically expect to see. Certainly from my perspective, when you look at some of the movements and some of the certainly discussion regards to investment markets, take a look at this. I mean, we don't have any kind of spike here at all. I mean, the VIX index actually hasn't even fired into the zone on my oscillator model. So it's interesting. Okay, so the VIX is still 21. I agree. Whatever, it's up from where it was, but we do not have any type of actual fear sort of hitting here. So again, that's possibly something that we should be aware of to come. But let's again continue to sort of just go chart by chart. Here's 3 semiconductor stocks, all very important. All were leaders and all are no longer leaders. But at the same time, again, this is a just perfect case in point. We need to respect demand and supply. And the way we can do that is by observing the chart. On the left side, Advanced Micro, that thing peaked out last year, very early on, down about 56% from its highs, making new lows for the week. Nvidia yesterday was off about 8% on its earnings. But again, consolidation, but either way, below that horizontal line, which is last summer's high. So again, I don't consider this to be a very constructive looking chart. Broadcom continues to be a very, very, big mega cap leader. At the same time, there's a lot of volatility in this, right? So you can have days when, I think yesterday the stock was off 7%, if I'm not mistaken, might have been even 8%. That's a lot, right? It's a lot of movement for a stock on a given day. And that's why it's so important to always remember to zoom out, because at this point, this is actually, I think, the healthiest stock of the three. Let's take a look here. Again, markets make fools of investors, and that includes me. And this is the thing. Markets can move way faster and way more powerfully than you and I may want to expect, right? And this is why we don't want to necessarily stick to our convictions. We want to be able to manage risk and reward. This is Tesla. Tesla had a huge rally, busted out of a massive base, early, like last year, actually, in the fall, and it had a huge run. And so again, we had trimmed on December the 17th here in the green circle, which in hindsight looks great. The next day was that biggest bar, really against. It was an outside day, 12.5% reversal, pretty ugly. The bottom line is that, if you'd asked me then whether I would expect that, Tesla was now going to be down 42% later, no, I'd say no, probably not, but I don't know, right? I would say anything is possible. Long story short is, again, while clients had sold or trimmed December 17th, we still got some clients that are holding positions. And again, they've just walked back those gains all the way. And so again, partial gains, yeah, it's one thing to look at. But again, as investors, all we can do, right, we can accept risk and we can seek reward. And we can manage our positions accordingly. And again, just remember that markets are not supposed to be easy, right? Markets are about fear and greed, ultimately, is what drives these decisions. And so we need to be aware of what that is telling us. Technology, continues to have problems, and this is not new. We've talked about this so many times ever since that summer, last summer, early July, shot across the bow with the reversal. Here's the technology sector here making multi-month lows yesterday. Pretty ugly day, certainly as the semiconductors themselves were pretty weak. Again, not a sector that is behaving very well at all. That said, take a look at some of these large cap InSync universe type stocks here that are sitting in the all InSync pool. These are uptrends. There's not much to say, right? I mean, Costco, Staples, Dollarama, a couple of financials and discretionary stocks. You can't label all stocks or sectors, for that matter, with the same brush, and I think we never want to do that as investors either. Let's talk about relative strength just one more time here. So Agnico Eagle Mines, this is a Canadian company listed, dual listed in the US and Canada. First off, in the upper panel, this is the same chart, okay? So you can just see it's an uptrend. There's not really any question of that. Now, I happen to know not only is it an uptrend, but it's a relatively strong uptrend. So it's a gold and precious metal miner. But if we take a look in the bottom here, what we've got AEM versus stocks themselves, the S&P 500, that's in an uptrend. And then if we compare it to, let's say, the gold industry group, well, gold stocks, well, we can see, well, that's in an uptrend. And if we can compare it to gold bullion, we can say, well, that's in an uptrend. So this is actually a very strong stock that is, without question, a leader. And so again, it's the kind of stock that I'd certainly want to acquire if we're looking to acquire stocks. And the bottom line is again, that you get diversification through some areas, right? And so this is another factor. As the market is weakened and breadth has deteriorated, the risk in individual stocks has been more significant, and as a result, hiding out in areas that you may not even be as interested in can be more important. The reason being is because we do get some diversification available. Let's finish off with sector watch here. You can see there's the staples up on the top of the list here, and utilities bouncing. And again, down at the bottom, there's technology we already talked about, and everything in between. Please follow me on X. I'm at David Cox RJ, and thanks again for your time this week. This has been David Cox, Portfolio Manager at Financially InSync in Waterloo, Canada.